Well, this is Current Yield Grant's Interest Rate Observer of the Year, and I am Jim Grant. And I was about to say with me, as always, is the great Deputy Editor of Grant's, Evan Lorenz, but Evan is off typing. This is what we do for a living around here. We got another issue of Grant's coming up, but today I am not alone. And with me is Scott Matthews. Happens to be a recent MBA class of 2021 at the Anderson School at UCLA. Before that, an alumnus at Davidson College. Before that, a fellow who came up through the ranks in private equity, who did some real estate, and now who is in a real live operating business. The business is called Hygiena. It's in California. And Scott is the Vice President for Global Operations and functionally is the number 2 operating officer, all of which has occurred by the age of 31. And I don't go around looking for interesting people. They come to me at wedding receptions. I was at the wedding of Harrison Woodill, who is the Chief Operating Officer, none of this co-effective chief. He is the Chief Operating Officer at Grant's Interest Rate Observer. And I sidled up to the bar, and there was Scott A. Matthews, and we fell to discussing Scott's career, what he does for a living. And I said, Scott, you should come on Current Yield to tell our listeners what you can learn about running a business by actually being inside it rather than by studying it through SEC issued documents. So that was the proposition. And on reflection, Scott said he wouldn't mind that. So here he is today. So Scott, welcome to you.
Thank you, Jim. It's great to be here. And most importantly for Harrison Waddell, he's just a great friend. So he could be the Chief Operating Officer of Grant's, but he is a recent new husband and just a great friend, all around A-plus guy.
Well, he is an A-plus Chief Operating Officer at Grant's Interest Rate Observer. Now, I would to proceed. There's so much to discuss with respect to Hygiena and your place in it and your career, but I want to focus this on our listeners who don't run or help to run an operating business, and they do their best to conduct due diligence by reading the 10Qs, the 10K, by perhaps visiting management, by talking to the competition, by engaging experts who are on call to discuss various industries, but they can only know so much. So this is going to be a very broad and inviting question, but I'm going to ask you, Scott, to name one thing that you have discovered that you know from inside a business that nobody, no matter how diligent as an outside public investor, can hope to know. Is there one thing that jumps to mind that is perhaps a key to the knowledge of a business that only the insiders will ever know?
Well, sure. I think, Jim, it's such a broad question, but I would start by focusing on the people. And the people are so important, and that's just ever more apparent in this day and age that we seem to be in with a tight labor market.
Yeah.
Having great people, and I wouldn't necessarily say, I mean, it's much easier to get from the inside from an HR system, but it is so possible to figure out the tenure of the key people from public sources, from LinkedIn to Glassdoor. I don't think it's necessarily proprietary. It's much easier to get the data from the source directly. But if you were looking at a business conducting your operational due diligence and you wanted to understand the stability and core of the business, and you do so by looking at the tenure of the people who've been along on the journey, I think that it really comes down to a great business is going to have and retain great people.
Yeah.
I was just going to say, and then from there, study what they do, right? Don't necessarily believe everything that is said, in those 10Ks, 10Qs, because that's oftentimes, I think, filled up with marketing information.
Yeah. Well, Hygiena, we should to place you and your career in the context of this business, we should know what you do for a living. So Hygiena is like in the clean business, right? And clean suddenly is a very big thing. So tell us briefly what this company does and how it got to be where it is, what
Sure.
the immediate future looks like.
Sure. So Hygiena, it's just such an exciting business. We're a life science business. As you said, we're in the business of testing for clean. Founded in 2002 by family. It was a family business up till 2016 when we sold to Warburg Pincus. and just had such a great run under the Warburg Pincus ownership. They really are great investment partners. Up until March of this year when we sold into a German conglomerate called the EW Group. And Hygiena along the way has grown exponentially and become a real multinational business. We produce tests across a range of uses that tell you whether or not surfaces or products are clean and healthy to consume, or environments are clean and healthy to participate in. So an environmental monitoring test, testing for microbial activity in a surgery room, is critically important to the success of healthcare. Same when you're testing for microbes in a food co-packer or on an airplane, or contamination in protein or in dairy products. There is a lot out there to be tested and to verify, and we're really excited to be a part of a business that is selling an apple pie and ice cream product that people need to be healthy.
Benjamin Graham said that when he was thinking about investing in business, he would imagine himself looking at a closely held business, kind of a standard Main Street kind of business, and he would say, what's the first thing that one should look at? And he would answer his own question, saying the balance sheet. Now, the balance sheet is of course available at a glance at documents, but the notion of approaching a business as if it were your own and not necessarily a cork on the sea of a speculative market. One of the things I noticed about your CV, Scott, is that you have led the due diligence in a number of your acquisitions. You've made several at Hygiene over the past several years. How do you go about kicking tires on closely held businesses, and how does that perhaps inform the way you read the news about publicly listed equities? What is the secret to making a good investment in a business that is not listed in an exchange?
Well, I think that, Jim, the first thing you said is a very finance-driven, finance-prioritized view of looking at a business, which is to look at the balance sheet. And I would never say that is not a good first stop. But I do know that as Hygiena looks at acquisitions and the ones we've done in the past, there's obviously a financial metric to that and how we're going to earn a return on our money. But the first thing that I would look at, that I do look at, is the compatibility of the product. And is it complementary to our product range and our customer base? And can we be strategic in the way that we are making investments in products, in great products that will be complementary to our customers? And I think that just carries huge value. And if it's a good product and we can drive some synergies in our customer base, then we'll make it a worthwhile investment. And there's an easy or very natural investment hypothesis that goes into it. But I think to start by looking at the balance sheet, yes, I totally grant the first screen being financial, but we're so excited about the products that we make. And
what surprises have you come across in your acquisitions? Where is one likely to be surprised? I ask this not so much for the literal application to making acquisitions of closely held businesses, but again to bring it to the worldview of the investor in public securities. You must do in-depth due diligence on these acquisitions. What kind of things have surprised you even after all of that? And how do those lessons inform the next set of acquisitions you make?
Well, I think it's a great question. It goes even back into my consulting days with A&M, and A&M being historically a participant in Harry's situation, is even when we're making great products, there is so much work to be done in the upkeep and back office to sustain, grow, improve, and drive cost efficiencies in this work. And so, there's obviously cleanup that is done and work that is done to improve the product base. And that's always one of the unknowns that quickly becomes known. No one opens the kimono fully, I think, in diligence. But I think that there is oftentimes in diligence a ton of focus on the CEO and the CFO. But in my experience in rising through the ranks, as I've tried to do, is there should be more focus on the next layer of management, the COO, the CIO, the R&D pipeline, and how do companies execute A, on their plan, and B, what are the abilities of that next layer of management, because those are the folks on the team who are going to help make an investment successful. And you would have no way of knowing that, by watching the Bloomberg terminal or reading a 10K, 10Q. That's something that you can find out through thorough investigations, through, a lot of it is shockingly readily available on LinkedIn.
One of the features of this present-day market, hugely speculative market, talking about the public market now, of course, is that execution seems to be not terribly important in comparison to the narrative and the press release. Avis up 100% 1 hour, and Hertz down 100% 1 hour, because not down 100%, but these are immense moves on these two companies, to pick only two, on the basis of narrative and press release. And one of the things that differentiates the world of closely held operations is that you don't get a multiple, right? What you earn is what comes to the bottom line. You don't get an option on the market's judgment of the multiple that particular set of earnings ought to be assigned. Does that make a difference in the way you go about planning for the future and the way you invest?
Jim, I don't know it's a fair characterization, because although we're not traded on the public markets, we certainly are responsible to our private equity investors, and they certainly think about multiple, and they certainly think about the value that we're creating in our EBITDA cash flows, and we are ultimately accountable to them. And so where Avis and Hertz and Apple and Tesla are offering 10Ks and 10Qs to the public markets, we're offering quarterly board meetings and report outs on our progress and our financial performance to our private investor. And I would agree with you, they're looking at the same things.
Right. The multiples they assign, though, are, for the time being,
private.
Theoretical.
That's right.
Yeah. The good thing about that is they're non-taxable. So Joe Biden can't come and tax the hypothetical multiples that you would assign if you were. Anyway, I wanted to ask you about your MBA.
Yeah.
A lot of people listening, and I think either are themselves at a stage in their careers where they think about that, or know somebody who is weighing that decision. And what about it? You finished last year. Would you do it again?
I would. I would even through COVID. And first off, the Anderson School, what a great place to be, and I would just highly recommend it. And they're going to thank me for saying that, I hope. But I went to business school in an interesting time in an interesting place. I came to California. I was 28 years old, I think, and I'm now just starting year 3 out here, and it was a great adventure. I was in New York for the 7 years after college, and traveled all over with Alvarez, and I found this portfolio company that I loved working for, and I fell in love with this management team. It's such a great group. And I took a flyer, and I said, we'll have a great adventure. I'll move to California. We'll take it through the sale of the business with Warburg, and then see what happens next. And one of the great ideas, one of the instruments of the success of this great adventure was to go to business school. If for no other reason than I thought it would be just a great place to make some friends, and that happened. But more than that, and I did the part-time program, which was really interesting. I worked at Hygiena and had a day job while going to school on nights and weekends. And what I loved about that is you were able to go to school at night and have a great class on, beyond the standard accounting and organizational behavior. We had great classes on leadership and how COVID was impacting businesses and supply chains, how, value and ethics and management, and then come back and apply it to work, whether it was Friday morning after the Thursday night class or Monday morning after the all-day Saturday on the campus down in Westwood.
Tell us about supply chains and about the persistence or the transitoriness of inflation. So let's begin with labor costs. In your neck of the woods in California, what are you seeing? Is there difficulty getting help at whatever level?
There is difficulty getting help at every level. I think there are articles every day on the tight labor market, that this is a job seekers market. And I don't think that is localized just to Ventura County here. I think that is everywhere. And we see it absolutely. I think everybody sees it. It comes in a couple ways. There are competitors that come up. Amazon just opened a warehouse down the street. But also in Europe, they're hiring just a ton of people and paying good money, good stimulus dollar money for technicians to process COVID tests. And that's taken a lot of the slack in the labor market. Those are folks that we would like to hire and absorb them at whatever cost to make sure that we're getting through the current situation. And absolutely, that applies a pressure to our business and our neighbors up and down the street.
That sounds like a margin a compressing problem too.
It absolutely is, and I can't imagine we're the only ones. And I think that it contributes to the inflation side, in the form of price increases. And we see price increases and offer price increases to make sure that we're maintaining the historical margins that we've always had.
Scott, you often hear people say that the plaint, we can't get help, only means that you are not paying enough for the help. Now, you find that at a reasonable bump up in wage or salary that you can find people and retain them, or is it a case of simply no people available, no qualified people available at a reasonable salary or wage?
Jim, did you see the article, it must have been now 2 months ago, maybe 2.5 in the Journal, about the number of job seekers for every opening in the United States? I think 20 years ago they said there were 7 job seekers for every job opening, and today there is 1 job seeker for every job opening. And it's not just our business. I went out to dinner last night, and there's a help wanted sign, and drive through Westlake Village, California, and it's just permeated everywhere. And to what I said before, it's a really exciting thing. There's new investment, new companies coming into our community, and they're taking they're taking the people, and absolutely there is wage competition to get the best employees. And it's not about the money, but it's about the money. We're paying.
I always think that too. I always think it's about the money. Tell me about this. Help us to understand this. The duel between transitory and persistent. No one, of course, can see very far into the future. No weather app can tell us more than 6 hours in the future. But tell me about your experience with your supply chains and whether this seems to be something that is going to go away or whether you perceive it to be perhaps longer lived.
Well, I think and I assume lots of other industrial businesses would agree that just when we thought we were over the curve before the Delta variant came, folks were relaxing over the summer. And then, of course, we got the Delta variant, and now my perception is that nobody's quite sure when supply chains will normalize. And what I've found really interesting is how the problem is manifesting itself. It started with toilet paper and Clorox, and has progressively moved through different spikes in the market. And it's not just consumer goods. Our operation in London, not 3 weeks ago, we had team members impacted by the petrol shortage, not because the UK didn't have enough petrol, but because they didn't have the drivers to get it to the gas station. And so I'm curious what you found, but it feels to me a bit like a moving target. And so the nice thing on the industrial side is you've got the confluence of shortages with cheap money. And so as an operator, I don't mind increasing our safety stock levels and investing in inventory in hopes that we can mitigate any future supply shock. I'm curious, actually, I'll just straight up ask you your research on increasing inventory levels as they correlate with supply chain shocks and cheap money.
Yeah, well, one would expect that if this inflation were to persist, if this is something more than Janet Yellen and Jerome Powell's flash in the pan, that what we would be seeing is at the margin borrowing from banks to finance inventories in the move from just in time to just in case. Right, we have had many years of the most kind of balletic coordination. In the just-in-time way, not a moment of waste, not a dollar expended unnecessarily on the incremental unit of inventory stock. So with the various shocks and with the anxieties about the future of international trade and with the developing tensions in China, people are, I think, rethinking this, and perhaps just as you said, are in more cases that we know are laying in the marginal unit of goods. What you don't see is that decision that appears to be widely taken. You don't see it reflected in the borrowing levels, at least not in bank borrowing levels. There's no uptake in what they call commercial and industrial lending. That to me is a little bit of a puzzle.
That's such a paradox, because the approach I would take is, there's the opportunity cost of having too much inventory, but has anyone considered the cost of not having the inventory?
I think many people are now considering
that. Full business shutdown, and isn't that what's happening with microchips?
Scott, what would you like to say that I haven't asked you? We got to wrap this up.
Yeah, well, first off, just what fun to be with you and join you in the podcast. There's really an interesting thing that I did with business school, and Anderson, again, what a great school. And when I finished the program, they gave you the option for the master's thesis, and you can do a consulting project or start a company or manage a stock portfolio. And but I really had this unique experience being a young manager with Hygiena. And I approached the dean of the program and said, I really have had this interesting experience being a young person leading a team, and I want to write about it. And they said, fabulous idea, go for it. And so, Jim, maybe the next time we talk, I think there's a really interesting story on the transition of all these Wall Street analysts and associates who reach a point where they reach that inflection point where they're either going to stick with it or they're going to go try their hand at something else. And for me, I went to try my hand at something else and work in a portfolio company, and have had such a unique experience learning about both how to operate a business, but leadership, learning about myself and growing in the experience. And there's some really neat findings that I wrote about in this master's thesis. I might turn it into a book or an article on the Young Manager's Playbook.
Ah, okay. Well, that is another. I expect that Harrison is not going to have another wedding. I think that's one that is one and done on the weddings. But you and I will have some other pretext to get together, and you can tell me a bit about your embryonic book. But in the meantime, Scott A. Matthews, age 31, if you please. Vice President Global Operations at Hygiena, LLC, and something tells me, Scott, we'll be hearing more about you and from you. So thank you for being with us, ladies and gentlemen. Thank you for listening. Until the next time, this is Grant's Interest Rate Observer of the Air.